Nobody seems to be noticing what is currently happening to crude oil, as history is currently repeating itself. And so, to understand the latest price action of this commodity, in today's video, we discuss the most important technicals, fundamentals, and also macroeconomics. Let's first have a look at the technicals. From the technicals, we do obviously have this long stretching downward trend, beautifully marked by this blue trend line here. And we're also having some support and resistance levels. We do have this massive support at around $55 right here, which we actually bounced off from and reversed from in this counter move rally that we're currently witnessing at Chronos. And we're also having some resistance levels here at $67, for example, which we're also currently retesting. But ultimately, it's quite likely that we actually reach this upper trend line here again, that we do see that retest once again, as we've seen it happen several times in the last few years. And obviously, there are two scenarios possible. We could see that this trend line is ultimately invalidated, that we do see a breakout to the upside here. But obviously, at the same time, what we could also see happening is a continuation of this bearish trend, of this long stretching bearish trend that we've seen happening, and we could even break below this $55 support area. Now, which one of those two scenarios is actually quite likely is a question that we can only answer by taking a look at the fundamentals and macroeconomics, because those are obviously the main drivers of this commodity. And as you do see here, history is actually repeating itself. And if you like this approach of taking a look at the past cycles and learn from them, I would like you to subscribe to our channel and give us a thumbs up if you appreciate our work here on YouTube. And also, don't hesitate to ask any questions if you have them. Yeah, thanks for your support. And now let's have a look at the weekly chart. Let's have a look at how actually the history is rhyming. And as we are currently having this long stretching downward trend, we do have seen quite similar things happening in the past. For example, we do have an interesting correlation here with the DXY, with the dollar. For example, we've seen this negative correlation happening before the great financial crisis, which actually beautifully marked the crash, as we've seen the DXY reverse here at the bottom. We've seen the DXY strengthen, we've seen the dollar strengthen, and ultimately that obviously marked this big crash that we've seen happening here to crude oil. At the same time, we've seen exactly that that scenario happen here, for example, in 2014 and also in 2020. It's always the same order of events happening. We do see a more or less weakening dollar, which is actually building up a kind of bubble. Not always here with crude oil, but essentially that is leading to a sell-off at crude oil. We tend to see that actually coincide to the DXY strengthening. And that also coincides to the gold to oil ratio behave in a certain way. We, for example, see that gold tends to outperform oil. Obviously, that is an energy commodity against a more or less safe haven asset. And when we do have economic distress, for example, we tend to see that gold is actually outperforming oil. That led to massive crisis, for example, at the 2008 financial crisis, that actually has been marked by this ratio falling. We've seen that also actually repeating here in history. We've seen that this ratio has fallen before those crashes several times. And ultimately, when this spiked to the upside, this actually marked massive crashes, right? Whenever you do see that gold is outperforming oil, in other words, whenever you do see this ratio going to the upside, that is a massive recession warning. And it basically preceded many crashes that we've witnessed here at crude oil. And as you may have already seen, we're in this long stretching upward trend for quite a while now. We have actually now reached levels that are quite similar to what we've seen here in 2020. And that's quite concerning to us at Chronos. But let's first have a look at the other indicators. For example, the copper to gold ratio, quite similar in this case. We do have those divergences that when we do see gold actually starting to outperform copper, in other words, when this ratio is falling, that also preceded many crashes. For example, here the 2008 great financial crisis but also here in 2014 and 2015, the other massive sell-offs that we've witnessed for crude oil. We've always seen those divergences where the copper to gold ratio actually weakened, and that ultimately led to massive sell-offs. And in fact, we are currently seeing exactly that happen again. Let's first have a look at the gold to S&P ratio before we conclude and actually tell you what this is actually meaning for our current situation. We are currently seeing with gold to S&P ratio quite similar things as well. We do tend to see that gold starts to outperform the stock market, the S&P 500, when those crises or when those bubbles are building up. We've seen gold outperforming the S&P before this crash happened here in 2008 and 2009. Also a massive signal that we have to take a look at, and that we in fact do take a look at quite serious at Chronos, as we've seen that happen several times. We've seen it happen here in 2015 as well. We've seen it happen here previous to the to the Corona crash, and we're also seeing it right now. And so, if you all combine those data points, if you combine this empirical evidence, that would obviously suggest, as we do see the DXY starting to consolidate and maybe even strengthening, as we do see the gold to oil ratio strengthening, as we do see this divergence here with the copper to gold ratio, and also the bullish trend here at the gold to S&P ratio, that those are all signals that obviously would suggest we do see a deflationary crash happening next year to crude oil. Obviously, if you have a look at the daily chart, this can take some time. We could see a quite interesting event happening, which is that we do see a breakout happening here in out of this downward trend that we've seen happen for several years now, which is a likely scenario because that tends to be a good buying opportunity, since the stops of the people that are shorting the markets are obviously taken out once again, which obviously would be a quite good buying opportunity for the institutionals. That's one of those scenarios that we actually do tend to see play out quite often. You do tend to see that that bullish breakout here happening, and that obviously gives you a lot of buyers, and a lot of stops of the sellers are triggered, which actually gives you a lot of market liquidity, or if you're an institutional, to actually enter short trades, and actually enter this short trade to the bottom. However, we have to take a look at the geopolitical situation with Iran. And so obviously we haven't really considered that until now, because we do see tensions rising. And if the Strait of Hormuz is closed, obviously that would lead to massive surges at crude oil. And so we do have those two contradicting scenarios. One is the deflationary developments that we've seen several times in all of those recessions. We've seen the DXY always jumped to the upside with when those recessions hit. You can beautifully see that here on the weekly chart, and you do also have this longer term structure where we've built out lower highs and lower lows in the last few decades. And as we've had this high here in 2022, this would obviously suggest we do see this trend continuing here. There are a lot of scenarios that are possible. Also, the geopolitical tensions that we're currently seeing building up would obviously suggest we could see higher crude oil prices. However, if we in fact see a deflationary stock market crash with a stronger dollar, and with credit actually getting tighter, the crude oil prices are likely crashing down, as we've seen it happen in those scenarios that we've just assessed here. And so those are the two contradicting scenarios. We've seen a lot of volatility in those times. The dollar is spiking to the upside, to the downside, And obviously, as crude oil is measured in the dollar, this also tends to lead to massive volatility in crude oil. Now, we are rather bearish at crude oil at Chronos because of the empirical evidences that we've just assessed. Now, obviously, as we do see a war beginning with Iran, that opinion, that standpoint from us is likely to change. We do expect to see that this breakout is actually happening. We do tend to see a bullish breakout to the upside. But what actually is likely about to happen is also what we're about to discuss in the next few videos. So if you don't want to miss them, please make sure to check out our channel and also give us a thumbs up if you liked this video. Subscribe, comment down below to support us. And yeah, thanks for your support. See you the next time. Bye bye.